Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we are doing part 2 of the new series I've started that I'm going to be doing every week about stock market terminology you guys should know. Every investor must know these types of terms. And this is the second part to this whole series. Like I said, every week I'm going to start doing this. This is going to be a normal thing once a week, covering terms, 10 terms at a time that you should know. Now we're only on part 2. That means we're going over very basic terms still. Very basic terms, and we will be for a little while, and then we'll start to get more toward the moderate terms, and then eventually, and who knows when this will be, but eventually over time we'll begin to get to extreme terms that are for very advanced investors, so I cannot wait till we get to that part. But for now, we got to cover the basics. What are the most basic terms? So 10 new ones today. Let's go ahead and get into this. Number 1 term we're covering today is individual investor. An individual investor is any normal, regular person who's going to go out and buy a stock. So if I buy a stock, I'm just a regular person, I'm considered an individual investor in that company. The term number 2 is an institutional investor. Now, where an individual investor and an institutional investor, I guess you could say, are different, is the institutional investor is something like a mutual fund buying a stock, a hedge fund, a big investment bank like a Goldman Sachs or JP Morgan, someone like that. So it's a big type of fund or something that's a big, huge investor, but not an individual person. It's an actual company investing in stocks or a fund or something like that. So always think individual investor, that's you. Institutional investor, that's the big guys, the ones that have hedge funds and are running mutual funds, those kinds of things. Long-term investor is term number 3. A long-term investor is considered anybody that invests in a stock or plans to invest in a stock for a minimum of 1 year. Generally, long-term investors, they like to think about way past 1 year. 1 year is the minimum, but a lot of long-term investors, they're thinking 3, 5, 10, 15 years out. They're thinking way long-term on that company. You're considered a long-term investor if you're someone who does that type of investing approach. That's very similar to my approach. I'm always thinking minimum 1 year on almost all scenarios. Day trader. A day trader is term number 4 today. Now, a day trader is someone that's trading in and out of stocks each and every day, if not multiple times per day, if not multiple times per hour. They are trading in and out of stocks constantly. Boom, 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 buy, sell, trade, constant trading patterns. They're looking at patterns on charts and things and get out at 1485 and then buy back at 1482 and do that again and again. They are just trading on the most minuscule amounts of money as far as up and down trades. That's a day trader, someone just getting in and out real quick. A short-term investor is something in between a day trader. A day trader is extreme. They're trading in and out of stocks every single day. A long-term investor is like a year out. A short-term investor is someone that's looking for maybe a few weeks to hold a stock, maybe a few months. Maybe they think a company's earnings are going to be really good coming out here. And so they're like, okay, let me buy that stock. I'll hold it for 2 months. The earnings will come out. It'll shoot up. And then I'll go ahead and sell it. That's a short-term investor. They're thinking, they're very short-term. They're thinking under a year. They're thinking months down the road or weeks down the road rather than, a day trader trading in and out and a long-term investor thinking super long-term. A short seller. Short seller is someone who believes a stock price is going down or the entire market's going down, and they basically short sell a stock or short sell an entire market, hoping that the market goes down. And then when the market goes down, they can actually cover their short position, buy those shares back at a much cheaper price than when they shorted it, which makes them have a profit. So, for example, maybe they go ahead and short sell a stock at $10, and then they decide to cover their short at $9, which gives them a $1 profit on each share. That's how a short seller makes money. So they're basically betting that a stock's going down or the entire market's going down. We have a large cap investor. A large cap investor is someone that invests in huge companies. We're talking companies that are 50, 100, 200 billion dollars, and that's their focus. Also, and this isn't really a term, but well, that I'm covering right now, but if you hear something like a large cap fund, that means it's a fund that's investing only in huge corporations, large cap corporations. So a large cap investor is someone that, like I said, they're looking to invest in the biggest of the big companies, you know, Coca-Cola and Pepsi, Apple, Google, Microsoft, Amazon, huge, huge, huge corporations, the biggest of the bigs. A mid-cap investor is a tier under them. They're looking to invest in companies maybe 20 billion to 50 billion, in that range as far as their market cap goes. So those are still huge corporations by any of our standards, you know, a regular person's standards, but they're still not even close to what an Apple or Google that trades at 500, 600, 700 billion dollar market caps. It's still way under that, but still big corporations. A small cap investor is usually investors who are looking to invest in companies that are between about $1 billion market cap and or we could say about a $500 million market cap, about a $500 million to say about 5 billion, or maybe even 10 billion, something like that. That's a small cap investor. That's actually the type of investor I am. I dabble in a lot of stocks that are between about 500 million market cap and about 10 billion. Sometimes I'll go a little higher. I'll push up to almost a mid cap where around 20 billion. But for the most part, I almost always stay in between that 500 million number and about 10 billion. I feel like those companies give you the best chance to make huge returns over time because they're smaller, but they're not so small that you're super risking it, I guess you could say. I just like those companies a lot. Those are the companies so I'm a long-term investor. I'm a small cap investor. Micro cap investor, that's someone who's looking to invest in super small companies that are still publicly traded, but they're very small. So we're talking under $250 million market cap, for sure under $500 million. Someone that's really looking for those small companies that maybe are going to grow to be huge companies one day. I'll give you guys an example. There was this apple juice company. It was called Hanson's Natural Beverages. Maybe you've heard of it. They produced apple juice and other types of ciders and whatnot. They were a super small company. They were like maybe a $25 million, $50 million market cap. Well, in 2002, this little juice company that decided that, hey, these energy drinks are kind of becoming a little more popular. It's a new growing category. Let's go ahead and come out with our own energy drink. And they came out with this energy drink, and it was twice the size of Red Bull, which Red Bull was really the only energy drink maker really in the United States and most of the world at that time. And they called it Monster Energy. Well, today Monster Energy trades at a market cap of around over 30 billion. Imagine being a micro-cap investor and buying into that company when it was a $25 million market cap or $50 million market cap. And now it is over 30 billion. That's insane. That is insane. Now, not many of those situations ever happen where you're going to hit what I call like a Powerball stock, you know, the jackpot, especially if you held it. Could you imagine selling that stock when it was like, say, $100 million market cap? And you're like, yes, I made a great profit. I doubled my money. And you see it grow to this gigantic corporation over the next decade. Hey, anyways, those are the 10 terms today, guys. I hope this video helped immensely you understand these 10 subjects. I try to explain it in the most human way possible so you guys can understand, because that's the way I understand best. So if I am doing a good job, give me a thumbs up on that. And until next time, part 3, we shall see again.
Have a great